So we get asked about flat rate pricing all the time. So I thought I'd put a quick video together on the upsides, the downsides, and how it impacts our customers and business in general. So who offers flat rate pricing? Everyone. The reason why is for a credit card processing company, it's probably one of the most profitable ways they can serve their customer. And also in general, it's just one of the most expensive. But every processor, Fiserv, Global, TSYS, Elavon, all the PayFacs. So a PayFac is kind of an intermediary between an acquiring bank and a processor, PayPal, Square, Stripe, QuickBooks. All the POS companies, it doesn't matter if it's NCR or others, Toast, Clover, you name it, they all offer flat rate. Shopify, BigCommerce, WooCommerce, and most of those are actually done through PayFacs like Stripe, and so they have private label deals there. And then mostly what's happened over the last year is a bunch of operational software, ERPs, EHRs. There's a bunch of three-letter terminologies for all these different things that you use to operate your day-to-day business. They've all learned to embed payments, and they all also offer a flat rate. So let's talk about pricing. Pricing can range at the very, very low end, 2.79%. It goes all the way up to 5%. There's a bunch of different flavors in between, but you can pretty much guess between 2.79 and 3.95%. So no matter what the transaction size is, that's usually the going rate. There's some variability here. So as much as they say flat rate, it doesn't always mean it's exactly going to be the same every time, but it stays in that range. On top of that, there usually is a transaction fee. Actually, 99.9% of the time, it's 25 to 30 cents. There are some companies that charge a little bit more, upwards of 50 cents I've seen. And then some of these tools, technology companies, or other systems have a monthly fee. So it could be $0. You can go to PayPal right now, set up an account. You don't have to pay anything. I think it's 2.95% and 30 cents. Right? So it really just depends on where you go, what the end pricing is going to be. QuickBooks and others, they have software, so they're charging you for the software, but if you use their software and you're paying $49 a month or $99 a month, whatever it might be, they give you access to processing at $2.9 and 30 cents. Now, there's some rules around this. It doesn't mean that it's flat for every single transaction you take. They've just kind of simplified it. And the way that they've done that usually is through card present or card not present pricing. Card present, meaning the physical card's in your hand, is going to cost you less than if the card's not there. Why? Because it's less secure. People type it in. You can get a fake credit card number. A bunch of different things can happen, right? So there's usually some rule in there where pricing can vary a little bit depending on card present or card not present. American Express may also have a separate price, and when you get to a certain volume point, you do need a separate American Express merchant account. So when you get to a certain volume, it's a lot, like $1 million a year. Then you really need to start thinking about having a totally separate Amex account. Now, in general, and this isn't every single account that you set up on a flat rate, this may not include other fees like gateway, fraud suite tools, things like that. So you got to look at the total cost of running a credit card payment. This may also not include your hardware. They may have licensing fees and other things. POS systems, which has its own software fees. So the end result, and this is 99.999% of the time, it's higher and likely the most expensive processing available. Now, especially compared to interchange, which is a cost plus model. We'll talk about that. But on average, from what our clients see, it's usually about 1.29 to 2% higher than a standard interchange plus pricing model. So here's some examples. Stripe, 2.9% and 30 cents. I mean, just grab this off their website. If it's manually entered, so typed in, they add another 50 basis points or 0.5%. So you're at 3.4 and 30 cents. International more, currency conversion more. There's a lot more to this. So really expensive. PayPal, same thing. They have some variability too. If you use their checkout tools, if you pay with Venmo, if you do this or that, or whatever. Traditionally, it's 2.99% plus a fixed fee. That fixed fee is variable. Most of that has to do with what country it's operating in. But let's just say it's all US. It's like 35 cents. Square, 2.9%, 30 cents. If you use different tools that they have, like send a link to make a payment, which surprisingly is actually more expensive, should be less expensive. If you generate an invoice using Square's tools, it's 3.3% and 30 cents. If you type it in, it's 3.5% and 15 cents. Again, just look at, these are PayFacs. They're not direct acquirer relationships. Some of those guys have a little bit lower, but really the lowest I've seen is 2.79%. And if you find a lower one, great. I think we can talk about some of the upsides there. It's awesome if you're a brand new startup. It's great if you have very low risk, if you're a small business, if you need to get to market fast. These are reasons to use flat rate pricing or a PayFac, which 99% of them are flat rate. It helps you get started, right? When you get to the $20,000 a month range, $25,000 a month, this is not the place you should be, especially if you're doing large volumes, 100, 200,000. It's a significant impact to the business unless it just simplifies the rest of your life, which has some intrinsic value to it. We'll talk about what those differences look like so that you can make your own calculator and make a decision on whether this makes sense for you. One thing it does do, and it's really good at, is it simplifies billing. You get one bill. It's pretty straightforward. You don't really have a ton to dig into, so you really know what you're getting every single month. It's also very predictable, right? You just know in general it's not going to be over a certain percentage to some degree, unless you're taking small transactions or you have small average ticket sizes. Typically, there's no additional fees, but sometimes these companies offer POS systems or other value-added things which they charge monthly fees for, and they should. The other thing which I love about PayFacs is they're integrated into everything. So you spin up a Shopify account, Shopify payments, you click a button, you fill it out, you're live. PayPal, same thing. If you're using e-commerce or other software providers, sometimes it's just a click of the button away and it's integrated directly, natively, meets all the PCI validation requirements and regulatory stuff that you would normally have to do manually. Again, these are all some of the upsides of flat rate and we'll just say PayFacs in general. So let's talk about the downsides. It is the single most expensive solution. It's predictive, but it's also predictably high. And we'll talk about how much higher, and I'll get into some of the economics, but in general, this is the single most expensive way to process a credit card. Card present versus card not present pricing can be night and day different than what it actually costs. So this is just a way for them to, they take some risk here because you're taking a card online and the card's physically not in your presence. That's great, but there's a lot of fraud suite tools that reduce some of that risk. If there is any risk, and when I say risk, I mean a single chargeback, most of these providers will hold your money. And so they can hold money up to 120 days. There are some SLAs that are a little bit, shorter than that. But if you're with PayPal or Square or Stripe and you get one chargeback, especially early on if you're a startup, this is a major problem. They can hold money in perpetuity or even create rotating holds if you have larger risk. So it's really a dangerous zone to walk if you have business startup challenges where you might have some risk. There is absolutely zero transparency or visibility into what the actual cost structure is. There are a couple companies that will give you the interchange data, but likely not. And what I mean by that is you'll get a credit card processing statement. It'll just say you took $100,000 in cards times X amount. This is your total in fees. So they don't really give you a detailed statement so that you can do analytics in the future when you decide, hey, I want to go get a professional merchant account or have, much more transparent pricing. It does make it less complicated, but again, it reduces a lot of the visibility that you need to have in the future to reduce expense. With flat rate, these companies who bucket everything in, they're susceptible to changing prices, and it could move dramatically depending on what's happening with Visa, MasterCard. If they change interchange and one of their top tier rates goes up, then of course they're going to have to correct for that. And that can affect all of your rate. So it's really important to keep an eye on any flat rate pricing. We've seen it move, 50 basis points in the last 5 years. That's a lot. That's 0.5% of your revenue that can just disappear in a very short period of time. The integration is amazing, but the exclusivity creates an exploit on you. The more you're integrated, the less free market choice you have, the more they can raise pricing at will with minimal notice and effectively hurt your business. So it's good because it's simple, it's expensive, and it can continue to go up in price because they also kick money back to their software arrangements or agreements they have in place, which means it can get even more expensive quickly because the software company can also raise the prices. And with a lot of those integrated solutions, PayFac and others, you can't pick up a phone and talk to somebody from Stripe. There are definitely very minimal cases where you can get a hold of somebody by phone, and that doesn't mean they have bad customer service. It's just really challenging. If you need a real partnership and real relationship, it gets really difficult. So let's talk about what matters most, the economics. So I'll give some examples, but really here's the things that it hurts the most: debit cards and low rewards impact cards. So these are traditional credit cards that maybe you get 1% cash back, and it's not like a Chase Sapphire or something where you get 3% cash back, right? So debit cards are probably the single lowest risk because the debit network is testing the bank account to make sure the funds are available. They're withdrawing those funds immediately. There's really little or no risk, and some of those cards cost 0.05%. So while you're paying the flat rate 3.19 and 30 cents, that debit card actually costs to the market 0.05%. So you're paying 3.14% more than you should be. It could be significant impacts depending on the volume of low cost interchange cards, debit being the worst. So how do you know that? You have to have the data. So, transparency is key here to be able to identify the volume of debit you're taking. Now, if you're a low volume transaction company, your average ticket is sub $10, this also makes a major impact. I mean, even at the $25 mark, this could make a significant impact on the cost to the company. Likely less than it being on the rate and more about the transaction fee, but we can talk about that. The goal here for these companies is the average interchange. They're not basing their rates off of the average interchange. What they're basing it off of is the highest price point in the interchange guide. So interchange is the cost. So if you're a processor and you want to make money, you're not going to say, let's take the average interchange, which is like 1.65 or 1.75, and that's what we're going to price it at, and we win some and we lose some. They're going to take the highest interchange rate, highest cost structure. They're going to add a markup to it, and that's going to be kind of the starting point for flat rate pricing. That added expense is typically more than 1% of every other card that's out there. So just understand that you're on average paying 1% more. So let's just look at debit card economics. So on the right, we have interchange plus. That's cost plus model, where they pass through the cost from the interchange and mark it up with some level of markup. Now, I gave a pretty fair markup for a normal size company, 20 basis points and 5 cents, or 0.2%. And you can see there the total fees are 0.26%, or I'm sorry, 26 cents. The net effective rate on a debit card would have been 1.04%. So now let's go look at your flat rate at some of the lower tiers. At a $25 transaction that you swipe, 2.79 and 30 cents, the fee is $1. So that net effective rate to you is 4%. So just this one business case with one card, you're paying almost 3% more. So herein lies a major problem with flat rate economics. Now, you have all walked into a convenience store, or even a pantry or wherever you've seen these signs. When using a credit or debit card, we have a minimum. Why is that? Low volume transactions or average ticket sizes that are low, it's just horrific what it can do to the rate. So here's a $10 transaction, using your flat rate experience pricing, 2.79% and 30 cents. The fee is 58 cents. That's 5.8% of the transaction. This is why you need to spend more than $10 at a convenience store. Take an even smaller transaction at $5. The fee is 44 cents. That's 8.8%. So again, flat rate economics here don't really work in low volume or low average ticket sizes for a company. There's 100 other examples that we don't need to get into. The over-under on this is, honestly, it's a great thing for startups and beginners. It's just the most expensive. And if you do have any kind of risk associated with the company, it's really difficult because they'll put holds in place. They'll hold money for a long period of time. And it's a really massive impact to companies. So if it were up to me, anyone that offers flat rate pricing, unless there's some really big economical value to you, I just don't think it's a great idea. And I would steer clear of flat rate pricing.